Hey guys, Jason here, taking a look at AAL. I don't think I've covered this one before, so if you're a first-time listener to our videos, Chart Guys is all about teaching technical analysis. We don't tell you to buy or sell. We try to teach you how to recognize changes and shifts in momentum in the market through the analysis of charts like this. And if you want to learn more about that, check out our website or send me a message, and we'll get to it. So AAL on the daily time frame, if you are looking at this time frame, it's kind of an unexpected drop. You've got great moves to the upside. You've set new highs. Things are looking great. And you're saying, like, this is never going to slow down. But if you go to the weekly time frame, there's a different picture here. This is what we call a very, very strong weekly downtrend, where we are setting lower highs every opportunity. So we have a lower high, and basically we just have this sort of action where every bull attempt is lower than the last one. And for the most part, we're also seeing lower lows. So that tells us that we are in a very strong weekly downtrend. Now we're getting close to this EMA 26, which is an average indicator. And it simply gives you a baseline to determine whether or not you're going to be paying more or less than what people have on average for a given amount of time. So the red one represents 26 days, and we're right near that level. So this is a possible area where you start to see a change in balance. It's no longer cheaper than it has been for the last month. It's now right about fair or even, or the market price for that particular ticker. So if you're looking at this and you're saying, you know, every week or every opportunity on the weekly time frame, we're setting lower highs. You know what? This is not a bad area for a weekly lower high. And it looks like, for the most part, that's going to be established as our weekly lower high. So 34.99, our high of day today, 30.34. And we go back here and we sort of see the opposite, where we're getting lower lows. So 27.02 and then 24.23. Now, if we go back to our daily time frame, you can see how that plays out. How did we lose our 34.99? There it goes. So on the daily time frame, it makes more sense now. There's that weekly high, our weekly low, our weekly lower high, and potentially setting up for a weekly lower low. So the point of this exercise is to show that there is a lot of weekly pressure here pushing the price down. So we're in the area where we would expect to see that happen, and we've seen that happen pretty substantially with its gap down and big volume coming in for this particular candlestick. So what's next? That's really what we want to figure out, and that's how we make our money. So we're looking at the daily time frame. Great, we're underneath our EMA 12s. We have a lot of pressure. We have some support at 24.33. We need to look at that as a possible area for us to turn around. But until then, what are we looking at? Well, let's go to our hourly time frame. There's that high, there's that drop, and now we're seeing a lot of pressure here. And we're seeing what is setting up to be an hourly bear flag. So basically, in all of this action, the bears have used up all of their energy. They've pushed the price down. They fought so hard to get here, and so many shares have traded hands. Now they're tired, and the only people who are able to play are these bulls who are very, very cautiously accumulating a little bit of stock on pretty low volume. But what we end up with is this pattern, which is a bearish flag, which looks like this. And it basically says, here's the fighting, here's where bears got tired, and here's where bulls have an opportunity. The problem is when the bears recompose themselves and start attacking again, they drive the price down. And in this case, it fits inside this nice little channel, and we can expect more movement to the downside if this pattern indeed holds. So what is our next support? Where could we possibly go? Well, we have to look on the 4-hour time frame and see where we found support before. There's not a lot to be found until we go to 25.61. That's a long way to go. So it's more likely we're going to see an oversold bounce on the hourly time frame. And at 29.60, there's still not a lot of room to go. So we need to be conservative, look for hourly support levels. And we have a couple. Let's call this guy 29.60. And that's really, well, perhaps right here, 27.66. That might be it. So what I'm trying to do is just use historical levels, how far bears were able to push the price down before they found some sort of support. So hourly bear flag, potential to take out 27.66. If we don't find support at 27.66, we'll just use our trend changes and our sub time frames to try and find some levels and some changes in momentum, but that's getting more advanced. And if you want to learn more about that, check out TheChartGuys.com. I'd be happy to teach you, and we have thousands of people who, well, I shouldn't say that. We have hundreds of people, over 1,000 members who absolutely love and are obsessed with charts as much as I am. And we just love to do this all day, every day. And I love to teach people. I encourage you to check it out. You can email me, info@thechartguys.com, add questions to YouTube, whatever you want. I want to help you learn how to do this. So I hope you do.